Okay, here's a look at the emini S&P for Friday, June the 10th, 2011. We are looking at the September contract here for the first time, and we're also, of course, looking at the market profiles. This is what occurred overnight. The one on the far right here is today's regular trading hours only market profile. This one over here is what happened yesterday. So we had suggested that in the 86 area, which turned out to be about an 81 area, could potentially act as support heading into today. And then we were also suggesting 82, which turns out to be 77 on the September contract. So you can see that in the overnight session, it traded below this support and also below this one a little bit. When the market opened right here in the regular trading hours, it quickly went down below that potential other support here at 77, and of course ended up by having a good down day. So we've got something like that where the market, what we felt could have been transitioning into up, we did not think that it was yet into the intraday up auction. We thought that it was possibly transitioning to it, but needed to hold above these supports in order to do so, and of course it didn't, and then ended up by having a good selling day. So that was a nice heads up for us to receive when we got up this morning and saw that the market had quite a bit of weight on it. So we also use, of course, the market profiles from just the regular trading session, which is what you're looking at right here. Here is our software and how we looked at the day today. You can see that we had some, well, first of all of our trades are shown. The up trades are shown in blue up arrow. You can see them here. And our short trades are shown in a down red arrow. So we ended up, the first trade that was shown, by the way, we also like to be in sync with our filter down here as much as we possibly can. And that's why this trade here, which was a long trade, was not taken. So it's pretty easy to determine whether or not you want to take the trade using our intelligent assistant. First of all, by just checking the filter, and of course we also use the intraday directional bias as well as any potential support / resistance areas. So the first trade that we ended up by getting into was actually these two combined. You can see the upper entry was on this dash line, the lower entry was on this dash line. Well, they're just 3 ticks apart, so we entered right in the middle and got short right here, and the market had a nice down move. So a nicely successful trade there. Our next trade that we took was this short trade here. Still a nice bearish looking filter, but the market just had a very quick run up, and we were stopped out on this trade. Immediately rallied up like this, eventually getting all the way up to in the September contract almost to 74. So turned out to be about I guess around about a 12-point rally, and about 10 points of it happening within probably the course of 10-15 minutes. Very quick rally there. It did give us this other short entry. We didn't actually get filled here, but we did get filled here. The market did bounce 2 points for us here, so we did nicely reach our first 2 objectives on that trade as well. And that was the only trade we took, or that was the last trade that we took, I should say. So we ended up with one trade here, which had a nice profit. We had our second trade here, which we were stopped out on, and then we had the third trade here that did nicely, reaching our first 2 objectives. So ended up overall, unfortunately, just with a break-even day today. Too bad we got stopped out so quickly, but there must have been something entered into the market, some sort of rumor or something like that, when that market shot up so quickly like that. But you know, these things happen. We ended up by getting stopped out on that trade. So overall, even with that being stopped out for the full amount, still ended up with a couple of nice trades, and overall a break-even day. So that's really it for today and for this week. Market is still looking like it wants to head lower. We're going to examine the 68 and 73 areas as resistance going into next week. 68 is right here, and the 73 area up in here as likely areas of resistance. and obviously still looking at on the short side as a preference. The next level down um, looks to be approximately 54, and then 41 and 37. So those are the prices that we're looking on the downside. If it should get up above 73, then we would be looking at areas where the market had closed yesterday, which would be up around the 82 area. So any questions or comments, always welcome. You can reach us right here at info@eminidaytrader.com, or just give us a phone call. Our number is on the website. So have a great weekend, and we'll see you again on Monday.